Hello, everybody. Mike Molina here. Well, I want to do a quick recap of this week's events and talk a little bit about the market. And most importantly, what is the Federal Reserve going to do about interest rates? Because I know everybody's dying to know about that. So first up, rates ticked back down this week, thankfully. We've had a nice steady decline for quite a while. We've had a couple weeks where we bumped slightly up, and now it looks like things are turning around on more positive economic news. So what about the market? What is that doing? Well, new home sales for June is in, and as you can see, it's gone up month over month a little bit, 0.6%. Year over year, it's still down 6.6%. The median home price fell slightly on new construction to 402, which is down 4.9% month over month. And the month supply for new construction is standing at 9.8%, at 9.8 months rather. Existing home sales, a different picture. The month over month sales are down. Year over year is flat. But the median home sales price for existing homes reached an all-time high in the month of June. That's a 2.7% increase month over month and 2% year over year. And we had homes selling above list, 21% of them did. First-time buyers at 30%, that's a good number. 4.7 month supply, and the average days on market nationally, 27 days. Now, this is a nice quote from Lawrence Yun. The record high median home price highlights how American homeowners' wealth continues to grow, a benefit of homeownership. The average homeowner's wealth has expanded by $140,900 over the past 5 years. That's amazing. Multiple years of undersupply are driving the record high home price. Home construction continues to lag population growth. So, in other words, that's a very long, complicated way of saying that the market is strong, even though it's slower in some places. We're not going to see any significant dip in prices, and we still have a housing shortage issue. So the big question is, what is the Federal Reserve going to do about rates? Well, let's talk about that. So we've had several positive inflation reports come out over the past several months. The last one that came out for June, which was earlier this week, it showed a slight uptick at 2.7%. Now, the media has made a whole big deal about this, saying that the tariffs are going to cause rapid inflation. Well, to find out if that's true or not, we need to look at the core numbers that make up this report. So we'll start with the headline. So remember that every inflation report has a headline number and a core number. So the headline number went up 0.29 month over month and went up to 2.67 from 2.35 year over year. Now, what caused that? Well, it was pretty much food a little bit, but it was mostly energy and gasoline. And why would that be? Well, that would be because what happened in June. Well, there was a lot of goings on with the United States and Israel, and it sent a scare through the markets that there was going to be all sorts of impact on oil and other energy supply, and that drove up the cost of energy in the month of June. I expect that we will see a nice decline again starting for the report for July that comes out next month. Now, the core reading continues to show us even more details. So it was the increase that we saw was all having to do with shelter, not all, but mostly having to do with shelter. Both rent, owner's equivalent rents, which is what homeowners think they can rent their house out for, and lodging away from home. So we saw a little bit of contribution from shelter, and that did contribute to things. But as far as our tariffs having an impact, this is some of the key parts of the core reading. Used car and trucks was down 0.7%. New cars were down 0.3%. Medical care was up 0.6%. None of these things, if anything was going to be impacted by tariffs, it most definitely would have been new cars, right? But it's not. That was down. So far at least, the impact of tariffs on inflation is not turning up in the numbers. Now, it's either being paid for by the countries that are exporting the products or the companies here domestically that are importing the products, or we need more time to see if there's going to be impact. Now, on August 1st, there's a whole bunch of tariffs that go into effect for countries that do not yet have a trade deal with the United States. And you can see they're all listed here. And these are some pretty significant tariff numbers. So I suspect that a lot of these countries will come to the table. I know that several of them, I believe, Philippines did already, and I understand that Thailand and Cambodia are coming to the table. So I think that a lot of these will be resolved by then, but I'm sure there's going to be several that are not. So again, we can't predict the future. These could have a significant impact on inflation, but so far, none of the tariffs have impacted inflation, and inflation, I would say that is a good thing. So with that news, obviously the Federal Reserve knows the numbers. They know these readings, and they know them very well. So why isn't the Federal Reserve lowering the Fed funds rate? Why are he and Donald Trump in this big war? And yes, I made that meme because I thought it'd be fun. So let's take a look at, I'm not going to be able to answer the question why Jerome Powell is being so stubborn, but I do want to take a look at the history and why you can understand why people are so upset about him not lowering the Fed funds rate, other than we want lower rates. But there's an actually really good reason why he's facing so much criticism. So this chart here shows the Fed funds rate, which is the pink line, okay, and the rate of inflation, which is the blue line. And as you can see, with some exceptions, most of the time, the Fed funds rate is below inflation, as it should be. And what you'll see here, if I blow up the chart, so this big long chart, which goes all the way back to 1996, this is just a blow up of that chart starting in January of 2020. And this is where it really becomes frustrating for those of us that are critical of Jerome Powell and why he's earned the nickname Too Late. So right here is the recession and the beginning of COVID. And of course, everything collapsed, and the Federal Reserve dropped the Fed funds rate down to basically zero, okay? And it continued on along as inflation continued to come down and down. And then we started to see an uptick in inflation. And so right about here, we started to see, it's not just that it was going up, but it was going up quite steeply, okay? And the Federal Reserve continued to just hold the rate. And then it continued even more steeply and up and up and up. So we had a whole year between the time that inflation started to go up rather significantly and steeply before the Federal Reserve made its first move. And the first move was way too gradual. And that trend continued from right around April, May of 2022. And they continued to raise the rate and continue to raise the rate. Now, let's look at an even bigger blow up, starting with from January 2021 to today. So this is where we see this is a blow up of the chart I just showed you. And you can see here is where we started to see the uptick in inflation, and only here did the Federal Reserve continue to begin to raise rates. Then here in February of 2023, inflation turned around finally, and it started to come down. Now, the Federal Reserve isn't going to act immediately. It needs to give it some time. But from February 2023 all the way down to about July or maybe August of 2023, so now we're talking 5 or 6 months, they continued to increase the Fed funds rate even as inflation was coming down. So one would think that as inflation comes down that they would hold and pause, but instead they continued to raise it. In other words, they overcorrected. And so then they raised them to here, and inflation continued to come down. And from here all the way to September 2024 was 11 months. Inflation was coming down very steadily all that time, and they did nothing. Then they made a 0.25% rate cut in September 2024 and a 0.5% rate cut in 2024, the following month, which was certainly not warranted given that they just made one rate cut. And I mean, I'm not saying that it was a bad thing to do it, but the justification for doing that doesn't match the justification for not doing it now. The justification for making this massive 0.5% rate cut in October of 2024, and I should note right before the elections, okay, does not match the justification for not doing it now. Since then, we've seen inflation continue to drop, and it continued to drop, and all the way, this is in the April, May, and June months, where it's down to what, a 4.5 year low, and they haven't cut it at all, and they're continuing to hold it because they're afraid of what might happen with tariffs, whereas way back here, when they had real data that inflation was actually going up, okay, and they did nothing for so long, and now that they can see that inflation is coming down and they're doing nothing. And here, inflation was coming down, but they waited to act for 11 months, and it was just too little too late. It was too little too late when they started to raise the rates, and it's too little too late now that inflation is coming significantly down. So that is the source of the criticism and the fight between the Federal Reserve and Donald Trump. So that's it. That's what's going on. That's why he's getting criticized so much, because his actions do not match the data. The data says that he should be cutting rates. Nobody thinks that he should cut the rates by 3% like the president says. That would be ridiculous. I hope that he's being hyperbolic there, but he should definitely cut them 1/4 or 0.5%, or do steady cuts, of 1/4% for like every other month or something, as long as the inflation reports match. But he's not doing anything, and one has to question why, because there is no reason based off of the data available why he would not. So what will he do? Who knows? But he's getting a lot of pressure, so fingers crossed that he'll cave to the pressure and that he will start to cut some rates. That's it for me today. Thank you so much for watching. Remember, the slides that I use in the videos are available for download in the link in the description on YouTube or in the email that you receive from me. And if you could, please, huge favor, like the video, share the video with somebody you think could benefit from it. And if you can, subscribe to the channel. Thanks so much. Have a wonderful day, and we'll talk with you soon. Take care.